So Joel, welcome.
Thank you for having me.
Thank you so much for coming to talk to us about sustainability finance. If I may, I want to start with a question broadening out to some context of this conversation. You've worked in many investment roles in many countries over the years. How have you, in your experience, seen the conversation around sustainability finance change?
It's a good question. So I've been in banking a long time. I don't want to tell you how long, but when I first started, there was virtually no discussion of sustainability. I sort of liken it to what's happened from an innovation digital perspective. Banking was so different in the 2000s and the 1990s. Today, would you believe it, I have 200 coders and data scientists working within the frontline banking team. And so similar to that change, we've seen a substantial change in the whole dialogue around sustainability. Virtually every conversation we have with clients on financing has some ESG component to it. And what's truly changed in this region is, it came earlier to Europe and North America, and now the conversation around sustainable finance, but also just the sustainable KPIs that each company wants to commit to is very positive.
And what do you think was pushing that change? Was it regulation, or do you think it was more opportunities to invest in things that you
I think
saw
it was
come up?
in part regulation, in part awareness, in part the successful companies in this region deal a lot with European companies and North American companies and Asian, and so they're getting dragged into the dialogue in some cases by some of their vendors. But I think overall it's positive. It's really a combination of all three. Having COP in Egypt last year and UAE this year has certainly elevated the dialogue and the awareness of the KPIs that each of the companies want to commit to.
Absolutely. And as we know, climate change costs an enormous amount of money. According to the WEF, it's $16 million an hour. That's mostly from climate change related weather events. But looking at Mashreq and your ESG investments, can you give us some specific examples of what you're looking into?
Sure. So we're focused on moving capital to sustainable end uses. So working with Chalhoub, working with the apparel group, working with Technomont Can
you explain a little bit more about those companies?
Sure. So we're moving capital to sustainable financing to enable a reduction. Generally, each of the KPIs contain a reduction in carbon emissions. We're also helping finance adaptation projects. So yes, that's after some of the tragic events occur, and mainly around water and drought. But we're looking to finance projects in Egypt and Bahrain and Saudi Arabia. And on the sustainable finance side, we're working with some of the major companies in the region and having a dialogue with them about what their KPIs are and how we can incentivize them to do even better.
Do you think that there's been a change in the conversation in what profit means in the banking system?
I think each bank is different. I think all of us at Mashreq Bank have KPIs ourselves for sustainable finance and for training our bankers on ESG in general and on the sustainable dialogue. We have it embedded in our credit policy, actually. So every banker is required to have the dialogue with the client and understand what their client's journey is, and then help hopefully in an innovative way with some of the products we're developing, help those companies do that.
There seems like there's been an enormous amount of progress and development at Mashreq in the work you're doing around sustainable finance. But looking ahead to the future, is there anything in particular you're excited about, or is there anything you would like to see come about?
So I'm most excited by the educational process that's been going on with our client base. The next level for the region, I think, will be carbon trading and carbon offset credits. And one of the things we're hoping to do is partner with some fintechs that have enabled that connectivity, Singapore and to the ADGM, to enable these companies to now take the next step if they want to and look for carbon credit offsets. If we can enable their ability to purchase those seamlessly embedded in our technology systems, that's pretty exciting. Hopefully we'll see that in the next year and a half.
From your experience, what is the importance and how much should the banking system be contributing to reach SDG targets by 2030?
So I think many banks have contributed and have set a standard for themselves. Each bank, depending on their size, has been more aggressive or less aggressive depending on who they are. We are proud of our commitment, which is $30 billion of sustainable finance by 2030. We're on the journey. We're fairly well down that path. But that just setting that goal for ourselves and getting that inculcated throughout the organization, makes everybody focus on it.
Absolutely. And finally, what would you like to see be taken out of COP28 for Mashreq in particular? What would you like to see come about from the conference?
So, one of the panels we just had was about social finance and sustainable finance. And one of the dialogues we're having is that it's not just up to the banks. We really need to create a good partnership with the public sector, with better regulatory consistency, as well as capital flows. So, I think what I'd like to see come out of COP, obviously setting aside some of the announcements of positive progress for the climate overall, but finding better ways to involve all the constituencies that must now come together and operate holistically to solve some of these issues.
Absolutely, that public-private stakeholder cooperation
Correct.
is so
Correct.
important. We've been hearing that so much this week. Joel, thank you so much for joining us.
Thank you for your time.